John, I want to start with just the most basic of questions here when we talk about commodities, and that's the actual cost of extraction, the cost of mining. We talk about this with oil, so I'm curious about this with gold. What is the cost to you of extracting an ounce of gold? You will produce between 570,000 to 650,000 ounces of gold this year. How much does it cost per ounce?
Well, right now, the industry average, what would put you in the first quartile would be to be under, say, $1,500 per ounce. And, depending on what mine we're talking about here, costs can go up as high as $2,500 to as much as $3,000 an ounce. But industry average would be probably in that $1,500, $1,600 range. We're coming in at roughly $1,400 an ounce right now. We refer to what is called all-in sustaining costs. Mm-hmm. But as we continue to ramp up our operation, particularly our flagship operation at Ilan Gold, and with a new mine we're bringing on in northern Manitoba, we're going to see our costs come down to about $1,100 in terms of all-in sustaining costs. And that's predicated on the fact that this is much lower cost production that we're bringing on. So the profit margins right now between our production costs and the price of gold, you just quoted gold's crossed $5,000 an ounce again. We've got pretty substantial margins. Like it's that you're looking at $3,100, $4,100 margins on a $5,000 gold price. It's pretty profitable times for the gold mining industry.
Yeah, it is. When we think about the variation that, at least with different mines that you have, that you operate, what makes it cheaper to extract from that northern Manitoba mine?
It's just a low cost operation. The two things it has going in its favor is it's got good grade. It's got these are open cast mines, so it has a very low ore to waste stripping ratio, and it has very low power costs. So we would be running our mills off the Manitoba power grid, which not widely known in the U.S., but Manitoba probably supplies most of the power for Minnesota, for example. And that's some of the lowest cost power in the U.S. But we'd be paying about 4 cents per kilowatt hour for power in northern Manitoba. So that makes that a very low cost operation.
Hey, one of the things I'm curious about, John, too, is, you guys have been kind of minting money, it feels like. If you think about...
the price of gold?
The price of gold. Up, 109%, your share price alone, 18% year to date. But as the price of gold has gone up just so much, and I'm just curious, there is some pressure maybe to figure out what's the best way. What do you do with all of that and do something with your balance sheets? Is it about returning cash to shareholders? Is it about pursuing acquisitions? You guys have made some adjustments. You eliminated some of the legacy hedges from Argonaut Gold. You've done some different things, but what is the best use of cash and how you think about your balance sheets?
That is the magic question.
You're welcome.
It's probably the biggest topic of conversation in the market these days. But what you have to appreciate is that the margins that we're enjoying today, they're fairly recent. The gold price has moved dramatically. If you look at a chart, it looks like a hockey stick.
Yeah.
So from roughly, if you go back to say 2016, the gold price was $1,100 per ounce. And if you go back to the end of, say, 2023, mm-hmm. gold prices were around, $2,000 per ounce. Well, suddenly in 24 and 25, with all the goings on in the world, everything from the U.S. election to this new sort of tariff policy that the Americans have been sort of introducing to world trade. Geopolitical events, everything from, Ukraine, you've just mentioned Iran on your newscast. All of these things have been driving the gold price. Mm-hmm. Americans are suddenly very conscious of the fact that the federal debt is just climbing to levels, absolutely unheard of in the past. We're approaching about $38 trillion now and growing at a rate of roughly a trillion dollars or so, every 6 or 8 months
Right.
or something. It's very rapid.
So in other
rate.
words, don't jump too fast to like doing things based on a $5,000 gold price. It sounds like.
What I mean to say is I don't think the $5,000 gold price is necessarily gold at its peak. I think gold could go substantially higher from where it is, and it's going to be, what would have to happen for that not to be the case? Well, everybody would have to wake up sometime in the next 3 months and decide to get their fiscal house in order.
Well, so John, we only
cut costs of government and raise taxes. Do you really think that's going to happen? I don't think so.
We only have 30 seconds left, so we have to be quick here. But does it make it so you want to keep the gold on your balance sheet for a longer period of time rather than sell it?
Well, we don't keep gold on our balance sheet.
But would you want to do that?
Why would I? I've got 16 million ounces of
because
gold
you think the
in
price of gold could go higher.
No, well, but I've just said it. Why would I keep it sitting in a vault when I've got 16 million ounces in the ground? The gold we produce is a very small component of the gold that we own. Most of the gold we own is in our reserves. If you add our reserves and resources, we've got 22 million ounces. So the gold we produce, we have to sell that.